Thank you very much to Inceif for having me here, and another opportunity to talk to you about something different on Islamic finance and banking. Today, I'm going to talk about the empirics of Islamic banking and finance. In particular, three things I would like to cover. One is what are the key issues in terms of research that has happened recently, and as a result of those issues, what are the key challenges? And then, based on those key challenges, I want to draw out some directions for future research, the way I see it evolving um, over the next 3 to 5 years. And of course, you don't have to agree with this. These are the way I see it. You might see it differently. But in seeing these things, I'm wearing a editor's hat because I do edit quite a few journals. So I have insider information, if you like, in terms of what is hot topics, what journals are looking forward to publishing. So that background I have, which I guess is an asset in terms of trying to understand future directions for research in Islamic banking and finance. What I thought I would do is tell you what has happened in the last 3 years. Right? So I picked up some statistics which I actually manually did because this is not available. I looked at all publications on Islamic banking and finance in the last 3 years, so 2014 to 2016. And I have put in capital letters in published in good journals because that's what we want to associate with, and that's what is going to bring Islamic finance to the mainstream. So I want to present some statistics because this I found this to be very interesting, and I've done some analysis based on this. So you can think of this as a critical look at the literature. So if we look at the last 3 years, there are 52 papers published in Islamic banking and finance in 4 of the good journals that I choose. And the journals I choose is Journal of Economic Behavior and Organization, Pacific Basin Finance Journal, Journal of International Financial Markets, Institutions and Money, and Economic Modeling. Now you'd ask why I have chosen these 4 journals. So there's 2 reasons why. One is these journals have published special issues of Islamic finance, so there has been a strong focus on promoting the work in Islamic finance. And hence, out of all the journals, they have published the most papers in Islamic finances. The second reason is perhaps relatively more important, is that these 4 journals have got very high impact factors, so they're ranked A sort of category of journals. What it means is that the following of these journals on Islamic finance is higher. So I'm trying to give a flavor of not necessarily a complete picture, but I don't think the story I'm going to tell you will change by looking at a few other journals, because the bulk, you could think of this as a representative sample of what I'm going to talk about. So if what I then did is, out of these 52 papers, I categorized them into different topics, major topics. So there are 5 major topics in which this research can be categorized into. One is asset pricing. Second is the profitability or performance of the stock markets, equities in particular. Third is the bank performance, Islamic bonds, and core movement of markets. So these 52 papers belong to either one of these 5. I put the popularity of the topic in the graph here. And this here is the percentage. So this gives you a feeling of where the bulk of the research has been happening. And we'll talk about why this is happening. And then this graph here will help us identify the future directions for research. But we need to understand this, and I think the message is very clear. You look at banking performance. So studies looking at the determinants of banking, efficiency of banking, comparative studies on Islamic and non-Islamic banks, right? They make up about 43% of the studies. So of the 52 papers published in the last 3 years in these good journals, 43% are in banking performance. The second is equity market performance. Right? So that's almost half. That's about 23%. So if you look at the banking, Islamic banking literature itself, it's really dominating, right? And only half of that is matched by equity market performance. And then there's others like Islamic bonds, which make up about 7%. Asset pricing, which is sort of, this is quite important, asset pricing, because it's one of the more fundamental core finance topics, asset pricing. In Islamic finance, it makes up about 12% of the studies. So, of course, this, I was saying that even if we included another 10 papers from sort of other journals, this story won't change. Simply because the gap here is just too much. Right? And it's quite obvious. I mean, those of you working in this would know that this is perhaps not as obvious as what I have got here, but it's very much believable. Well, of course, that's what is happening as the data tells us. These graph here tells us that there is, for some reasons, bank performance-based studies is more popular. And the question that comes to mind is why. So I've been thinking about that because this thing was not that obvious to me when I started to look into this. And one very obvious reason comes to mind is the availability of data. So Bankscope, for example, right, has been instrumental in driving this sort of research. Now that's important to keep in mind when we try to develop future directions. Asset pricing studies, these are more index-based. So you got the stock market price indices, right, for countries. So it's easily available at daily frequency, monthly frequency. That's what is equity performance is sort of related to that. Equity performance, you're looking at markets, behavior of markets, comparing markets. So market level data is quite easily available from a number of sources, like DataStream, Bloomberg, even Yahoo Finance has some data, right? So you see that the popularity of two of the main topics is perhaps due in large part to the availability of easy access to data, right? The same cannot be said with other topics. So we'll talk about this. For now, it's good to just keep in mind that as we look at other things. Of the 52 studies, they seem to be pretty much either time series or panel data. There's only one study I found which is a survey based. Right? And typically with time series data, it's either use of daily data or monthly data. Again, it's because of the availability of data. And the best that people have done is, in a historical sense, is to go back as far as 1980. So makes up about 30, 40 years of data. Panel data has come at a cost of a very short time period. So if I look at the bulk of these 52 studies, the time dimension in the panel data models is very short, like mostly 5 years. Very rare to get something like 10 years. So while panel data has progressed, the cost has been, of course, the time dimension. So we have not been able to pick up what has happened over time in terms of the developments in the Islamic finance industry. And that is relevant because, as we know, the Islamic finance industry has just multiplied over time, right, compared to what was the situation 10 years ago. So that time dimension has got some richness in information, which panel data, of course, does not address. I mean, this is not a criticism of the literature. People could only do what is available, right, in terms of data. But I'm just making a statement in terms of it allowing us to think about future directions of research going forward. Okay, so that's another feature, time series and panel data predominantly used, and again has to do with the availability of data. Methods used, now this is very important. You perhaps wouldn't have realized this. You might have known that the banking sector research is more heavily or more popular, but maybe not necessarily in terms of the methods that are used. And this has got significant implications, not only what we should be thinking now, but also in terms of how we should be thinking about developing future ideas, right? So I want to, this message is very clear. You look at, I've got here a combination of econometric models as well as financial models. The first point there is econometric. So you look at, let's go through this, co-integration, predictability, popular, GARCH, stochastic dominance, DEA, Tobit, Probit, GLS, L star, GMM, SVA, event study, wavelength, meta frontier, price discovery model. Heavily statistically, econometrically driven. Quite a lot. Out of those 52 studies, you see, this is quite a lot of methods used. Look at the finance models. Momentum, just a few studies. Portfolio diversification, mean variance, investor models, and value at risk. And out of those 52 studies, maybe only 10% would have used these financial models. The other 90% belongs here, only here. So what is the message? The message is that so far, and again this is not a criticism of the literature. We have to make a start somewhere. This is what the literature has done. I'm trying to draw out some implications and messages that we can take forward and think about future directions, which is another topic we're going to talk about. The message here is that the focus so far in Islamic finance and banking research has been on the statistics, on the econometrics. So the inspiration is coming from the suitability of methods. And as I said, there's nothing wrong in that. But of course, then there is cost as well. Because when we talk about econometrics and statistics only, we are ignoring the economic relevance or the practical relevance of the results that we are getting. So the question that lingers is, you've done all these tests, so what? That's the question. What does it mean for decision making in Islamic banking and finance from an investment point of view? Those questions have only been addressed by this 10% of these 52 studies, where they'll actually go and look at the meaning of the statistics for practical relevance. What does it mean if you wanted to invest in Islamic banking and finance? What does it mean for you? So that is the status. That is the status quo. That's where the literature is at the moment. All right. Robustness test. I put a question mark. So I'm asking whether these 52 studies have undertaken robustness tests, because out of these 52 studies, only 2 or 3 are theory-based papers. The rest of the papers are applied in the sense that they make use of some data. As I said, whether it's time series data or panel data. So naturally, when you are using data, you're doing applied work, there has to be some effort made towards saying something about robustness. How robust are your findings? And it becomes particularly more meaningful when you are trying to develop the link between statistics and economics. In other words, where you are trying to say that the statistical results you have got the following implications for investment decision making. If that is the claim you are making, you need to demonstrate the robustness of the results. So I asked the question, out of these 52 studies, how many do robustness tests? And keep in mind, only 2 or 3 are theory-based, so we can excuse them. Right? Almost 50% have got no robustness test. Again, this is not the criticism of the literature. Because as I said, no, we had to start somewhere. We have done that start. What we need to think now is the next phase. That's the next 3 to 5 years. Right? So here is some scope, because there is very limited effort made at saying something about the robustness. capitalism. And even, so I went to those 50% of the studies, so half of the papers, where there was robustness test done. So I wanted to see actually what they have done, right, to get a feeling of what sort of robustness strategies can be implemented. And what I find here, again, as I'm saying, is I'm not trying to criticize the literature, but I'm trying to move on from that. I find that those robustness tests undertaken are really not serious robustness tests that you would associate with. Right? But at least some attempt has been made. So we're giving credit to the fact that something has been done. And of course, there are reasons why people may not have taken serious robustness tests is because of the data limitations. So this is one area we can keep in mind when we talk about future direction. And as I'm saying here, the last point, it is okay. It is okay that this is the situation, right? Because we don't expect too much. Islamic finance research from a top journal publication point of view is a relatively new thing. That's why we're looking at this period of 2014, because it's only in the last 3 years there has been a greater push towards bringing Islamic finance research into the bigger journals, into the high impact factor journals. Right? So it's a new beginning, and we're going to make progress on that. All right. So what are the key challenges then? Well, to me, one of the first things is to improve on the quality of data. So and again, I'm basing this judgment on the 52 papers I have read, looked at seriously. As I said, looking at another 10, 20 papers won't change. Right? If anything, it is going to solidify these arguments, because the issues are pretty much the same. What I believe that there should be more in-depth analysis, moving away from market level studies, looking at indices, to stock level or firm level. So you need to go down deeper, and there's a good reason for that, because of the heterogeneity issues that are there. Right? So we need to look at stocks individually and break away from the homogeneity assumption that characterizes studies based on market. Because market can only tell us a certain level and no more. So after some point, the value of looking at market level analysis, it just disappears. And a good example is that if you have decided to invest in the Malaysian market, right, the next question is, where exactly in this market? Which stocks do you want to buy? Right? So a market level analysis never tells you that level of information which allows you to actually take investment decisions. Okay? So a lot of the examples like this are quite replete in this literature, where market-based studies have been purely devoted to the statistical side. So you recall in the methodology I showed you this large number of methods applied, purely driven by the statistics. And the bulk of them are based on market indices, and then that's what you could do. Right? You can't do anything else with them in terms of developing an economic story. But had you looked at the stock level analysis, you have an investment story to tell. Right? So what I believe is this hope, and this would be the challenge. The challenge would be to come up with the creative research questions that allows you to analyze the stocks, which would have a stronger implication on the practical aspect of the work. The second challenge I see is that, as I have shown you from these studies, there are too much focus on the statistics. To an extent, it is good, right? Because we need the statistics. The quantitative methods is very important in trying to depict relationships, in trying to understand the behavior of what we are trying to say. And it's very important to test hypotheses, right? But it's equally important to understand the meaning of those statistics. So if you are getting a number like 0.38, what does it mean? Simply saying that 0.38 is a statistically significant relationship is not good enough. Right? Okay. And that's what I mean by the economics. So what does it mean? How can we take that 0.38 in a meaningful way and do something with it that can appeal to the industry? So there's an angle an appeal angle to the industry in the sense that we want to demonstrate the impact of our work. And I think that is what is missing. So that would be the challenge, to break away, because it's easy to get absorbed in the statistics. Why? Because these days we have got a lot of softwares which are sort of menu driven. New methods are there. You just put your data, click the button, you get a set of numbers which you put in a table. Right? It's become methodology driven without allowing researchers to understand the economics behind those statistics. And I think that is the challenge, which should start at the PhD level research, pretty much, right? Where if you are doing some data analysis, you must understand the reasons why you are doing it, and when you do something and you get an output, how do you actually meaningfully interpret that? And that has been something that Inceif has been doing here through the workshops that we have been having, trying to emphasize on some of the more fundamental aspects of trying to understand issues related with data. So that to me would be a key challenge, because it's not a straightforward thing to achieve overnight. It needs a framework, a strategic framework to achieve that sort of outcome. The third challenge I see is trying to come up with unique research questions relative to the broader literature, because at the moment when you look at this literature that I have alluded to here, the focus has been not necessarily on the innovation of the research question, but simply taking a research question that has been looked at elsewhere and bringing it into Islamic finance, replicating. And that has been a problem in terms of breaking into other good journals. So the uniqueness of the research question will help build the bridge between your research and publications in more mainstream journals. And it's happening. We see there's a shift, and I think we need to be part of the shift and ensure that the shift is faster in terms of speed. So these to me would be the key challenges. And then the last set of things we want to talk about is the future direction. So where we can focus, right, based on what has been done, based on what challenges exist in the system, and based, of course, on the constraints that we have with respect to data in particular. So one thing is to think outside the box, think outside the conventional topic. So instead of taking something out from, or a hypothesis from conventional finance, we might want to look at things which matter directly to the Islamic finance industry, the functioning of the industry, and develop a hypothesis out of that. Like a good one is risk sharing that we have been talking about here. So some sort of thinking has to happen which is outside the norms. And that is going to drive the uniqueness of the research question and ultimately the depth of the research question. Having said that, from the existing literature, again this comes out of the literature, there are limited work on certain topics within Islamic finance, which has got connections with conventional finance. And as the graph I put in there, the chart it showed, mutual funds, I see very limited, perhaps one or two studies only, and very country specific. So they spoke to look at mutual funds as an investment class within Islamic finance research. Islamic bonds as well. I mean, this is an area where some theoretical work has been done. So maybe there's bigger scope there to look at Islamic bonds in a more applied way with data, obviously. And the third one, which perhaps no one has looked at so far, is the role of institutions in performance of Islamic financial markets. So role of institutions, including property rights, including democracy, including the rule of law. I think these things can also be brought into the story on Islamic finance. The other things that has been pretty much no work on this is corporate investment. There's some sort of related things have happened, but not in terms of what determines Islamic corporate investment. Are there unique features in Islamic corporate finance that can potentially have implications for conventional finance. Right? So the 52 studies I showed you, there's only one study sort of on family ties, but not from a corporate investment point of view. So I think that corporate finance related, capital structure, corporate investment, I think these things would be quite raw looking at from a corporate finance point of view. So maybe that is another area that needs to be looked at, and I understand that one of the key limitations there is data on corporate. So maybe greater effort should go on constructing data sets that actually allow us to test some of these things in corporate finance. Okay, and the third one, we talked a bit about this, is making practical sense of statistical and econometric analysis. What do the statistics imply for practical purposes? So if we take a more practical approach to, without ignoring the statistics and econometrics, but having that bridge between the statistics, econometrics, and the economic storytelling. So thus the statistical story has a connection to the economic story. That is more important. And if we are able to do that in Islamic finance, I think we will be able to appeal to industry, because the industry is also looking at answers to these sort of questions. And I think we have a great opportunity here to actually provide some of the answers to these sort of questions, both as academics and also in collaboration with industry, provided we can sell the ideas that we have in a meaningful way. And the meaningful way means developing the bridge between the statistics and the economics. And the third direction, again, it sort of leads from what I have been saying based on the literature, is that because the bulk of our research is applied data-based, we need to seriously start thinking about what constitutes a reasonable robustness test in this literature. And the reason I say we need to decide that, because there is no theory that dictates or guides us. Right? This decision would be based on the research topic we have, which in turn would be dictated by what sort of data constraints we have. Right? So it's not an easy question, but it's a question that we must ask now, and we must prepare to sell our work within the umbrella of a strong robustness test, because that is, to me, quite key in terms of the competition that exists for publications. And also when we want to sell this idea to industry, a natural question would be, how is this results robust? We need to demonstrate to the best of our abilities that whatever we are proposing to industry is the best. And only then we will make that connection between our work and the industry. So robustness plays not only an academic role here, but also a very important role in developing the link between our work and the needs of the industry. That brings me to what would be the concluding remarks. I have a few things just to summarize. Islamic banking and finance, I think we need to understand from the very outset, is a relatively new area of research. From the point of view of publication, we all know Islamic finance research has been there for decades, right? But most of these publications have been in unknown areas, in unknown domains, which neither you nor I have read, most of it. Okay. So last 3 years has brought Islamic finance research from a publication point of view to a new platform. And this is why we're looking at this 2014-2016 period, because journals, mainstream journals, major journals in business have actually published special issues of Islam, giving us that kind of platform to start thinking of the type of things that I've just talked: robustness, new ideas, new directions. And so far, what we know is there are 5 main topics of research which are led by Islamic banking and equity market performance. And by far, it's, you could easily say almost 50% of the studies are on banking. And now we need to think outside banking, not ignoring banking at all, but to bring into Islamic finance other sort of areas where limited research is happening. And some of these things I have pointed out. In terms of features of this literature, not a criticism, but clear features, heavily focused on the statistics. Thus, there's a demand to look at the economic side of the story, and limited focus on the robustness. So we can start to think more about the robustness. All right, and some of the research questions, if we can bring innovation in the research questions, as I said, these innovative research questions and hence hypotheses will help us create new data sets. And some of my work, or most of my work, follows in that direction of new data sets. Focus on new research should be on the economic results, without ignoring the statistics and the econometrics, because those are the backbone. But having done the econometrics and statistics, we need to ask the critical questions that matter to not only PhD students, us, but also to industry. What do these statistics do? And once we are able to bridge those gaps, I think we will enjoy more success in terms of not only publishing our work in journals, but also making that connection with the industry, which I think with Islamic finance research is quite important, given the growth of the government. Thank you very much for patiently listening.